Jessie Livermore taught traders how to read the tape, sit patiently, follow the trend, and protect themselves from ruin. But there was one lesson he never fully explained. What happens when a trader cannot afford to sit patiently because scarcity is sitting beside them? What happens when the money in your brokerage account is also rent money, grocery money, emergency money, and proof that you can finally change your family's financial future? Livermore taught us how to trade the market. He did not teach us how generations of financial exclusion can enter the market through our nervous system. But today, we are discussing what Jessie Livermore did not say. There's no scarcity of opportunity to make a living at what you love. There's only scarcity of resolve to make it happen. Wayne Dyer. Today we are going to honor the wisdom of one of the most influential traders in Wall Street history, while also examining the chapter his work could not fully address. Jessie Livermore began studying price movements as a teenager and eventually became one of the most famous speculators of the early 20th century. His experiences inspired Edwin Lefebvre's classic book, Reminiscences of a Stock Operator. And Livermore later published his own trading principles in How to Trade Stocks. Livermore gave the trading world some of its most enduring lessons. He taught us that traders do not need to participate in every market move. In Reminiscence, the narrator warns about the Wall Street fool who believes he must trade constantly. He taught us that patience can be more valuable than prediction. One of the book's most famous observations is this: it is always my sitting. Got that? My sitting tight. Livermore understood that recognizing a move was only part of the process. The greater challenge was remaining patient enough to allow the move to develop. He taught traders not to average down blindly. He emphasized protecting capital, studying market behavior, respecting the line of least resistance, and learning from losses rather than blaming the market. He also recognized that knowing what not to do is nearly as important as knowing what to do. And perhaps, most importantly, Livermore taught that the market itself is a demanding teacher. As the book explains, the game taught me the game, and it didn't spare the rod while teaching. Those lessons transformed generations of traders. They still matter today. Wait for confirmation. Do not trade constantly. Do not argue with price. Do not let someone else's opinion overpower your evidence. Cut losses. Hold appropriate winners. Study yourself as carefully as you study the chart. That is serious wisdom. But there is still another question. What did Jessie Livermore miss? Livermore taught people to sit tight, but he did not fully explain how difficult it is to sit tight when your entire life has trained you to believe that opportunities are rare. He taught traders to wait for the right setup, but he did not deeply explore what happens when someone has spent a lifetime watching opportunities disappear before they ever had a chance to reach them. He taught capital preservation, but he did not write extensively about trading from a community where many families begin with dramatically less capital to preserve. He taught people to remove emotion from execution. But emotion does not arrive from nowhere. Sometimes it comes from debt. Sometimes it comes from financial insecurity. Sometimes it comes from seeing your parents work hard and still struggle. Sometimes it comes from knowing that one emergency could erase everything you have saved. And sometimes it comes from carrying the expectation that your one small trading account must somehow repair generations of lost opportunity. That is where we must introduce scarcity theory. But first, we must understand why scarcity is not an imaginary concern for many Black traders. According to the Federal Reserve's 2022 survey of consumer finances, the median wealth of white families was approximately $285,000, while the median wealth of Black families was approximately $44,900. That means the typical Black family held less than 16% of the wealth held by the typical white family. The same data showed that approximately 65.6% of white families own stocks, directly or indirectly, compared to about 39.2% of Black families. This is not merely a difference in financial behavior. It reflects differences in inherited wealth, workplace retirement access, home ownership, income stability, available capital, financial education, and the ability to take calculated risks without being destroyed by one setback. The Federal Reserve also found that nearly 60% of Black families reported that they did not have a good idea what their family income would be in the following year, compared with approximately 31% of white families. Think about what uncertainty does psychologically. When tomorrow's income feels uncertain, today's opportunities can feel urgent. When capital has been historically difficult to accumulate, every loss can feel larger than its numerical value. A $200 loss is not always experienced as merely $200. It may be experienced as, that was my utility bill. That was my child's expense. That was the beginning of my emergency savings. That was proof that I should have never tried this. The number appears on the screen, but the meaning is stored in the nervous system. That is where scarcity enters the trade. So what is scarcity theory? Scarcity theory was popularized by behavioral economist Sandhi Maliathan and psychologist Eldar Shafir. The central idea is that having too little of an important resource like money, time, food, opportunity, or social support captures attention. Scarcity creates a mental tunnel. Inside the tunnel, the urgent need becomes so dominant that other information receives less attention. Researchers refer to this as tunneling. Scarcity may also consume mental bandwidth, the cognitive capacity needed for planning, impulse control, flexible thinking, and long-term decision-making. This does not mean people with fewer resources are less intelligent. That interpretation would be offensive and inaccurate. It means the burden of managing scarcity can occupy cognitive space. Imagine trying to analyze SPY while simultaneously thinking about a late payment, an upcoming bill, an unstable job, a family emergency, and how badly you need today's trade to work. The chart has not changed, but your ability to process it objectively has. That is the scarcity tax. A trader operating from abundance may view a setup as an opportunity among thousands. A trader operating from scarcity may view the same setup as the opportunity. That changes everything. One trader says, if this setup does not confirm, I will wait. The other trader says, if I miss the move, I may never get another chance. One trader says, this loss falls within my risk plan. The other trader says, I cannot afford for this trade to lose. so I need to hold it longer. One trader says the market owes me nothing. The other trader says I need the market to fix something in my life. The moment you need the trade emotionally, you become less capable of managing it rationally. That is the lesson Livermore's principles need for today. He told us to sit tight. Scarcity theory explains why sitting tight may feel almost unbearable.
Pause. No, seriously, pause for 1 second. If you're watching this right now, it probably means one of two things. You're either trying to make sense of the market, or the market just humbled you a little today. Well, first, thank you for being here and watching this channel. That means more than you probably realize. Because trading can feel incredibly lonely. 1 minute you're confident, the next minute price reverses, and you're staring at the screen thinking, what just happened? You study the charts, you watch the videos, you try to follow the rules, but somehow the market still finds a way to hit your stop, shake your confidence, and make you question whether you even belong here. And let me tell you something very clearly. You are not crazy, and you are not the only one experiencing this. Most traders aren't failing because they're lazy. They're failing because they're navigating chaos without structure. They're guessing, they're chasing, they're reacting to price instead of preparing for it. That frustration you feel when price moves exactly where you expected after you close your trade. Yeah, we've all been there. That's exactly why I built this community, a place where traders can stop guessing and start trading with clarity, structure, and confidence. Inside our free community, I share the exact SPY levels I'm watching for the next trading day, the same level institutions are paying attention to. Support, resistance, key areas where decisions actually happen. No fluff, no noise. Just structure that helps you approach the market with freedom and clarity instead of fear and confusion. So if you're serious about becoming a better trader, join our free community using the link in the description. Grab tomorrow's SPY levels, introduce yourself, and let me personally welcome you inside. You don't have to figure this out alone anymore. And if this video helped you even a little, like the video, subscribe to the channel, and I'll see you in the community.
So, how do you trade without letting scarcity trade for you? First, never trade money that has already been assigned a survival job. Rent money should pay rent. Food money should buy food. Emergency money should protect emergencies. When your trading money has multiple jobs, every fluctuation becomes emotionally loaded. Second, build financial slack before demanding performance. Slack means breathing room. It may be a small cash reserve, lower position size, fewer trades, or enough time to wait for a better setup. Without slack, every decision feels urgent. Third, measure execution before income. Instead of asking only, how much did I make? Ask, did I follow my entry rule? Did I respect my maximum risk? Did I wait for confirmation? Did I trade at the level? Did I stop when my setup was invalidated? A profitable bad trade can reinforce destructive behavior. A controlled loss taken according to plan may demonstrate progress. Fourth, replace the rescue trade mentality. No single trade is coming to rescue your finances, your family, or your future. That is too much weight to place on one option contract. Your financial future will be shaped by a consequence of disciplined decisions, not one dramatic candle. Fifth, normalize no trade days. Cash is a position. Waiting is a decision. Preserving your attention is part of preserving your capital. 6, use predetermined levels. Levels reduce the need to improvise while emotionally activated. When you know the key support, resistance, and invalidation points before entering, you are less vulnerable to making decisions from fear. 7, create a rule for emotional intensity. When the trade feels like it has to work, do not increase your size. Reduce it or step away. Urgency is not confirmation. Desperation is not conviction. And hope is not a setup. Wealth is not merely having more money. Wealth is having enough internal and external stability that you do not have to violate your principles to pursue it. A wealthy trading mindset says, I can miss this trade and remain whole. I can take this loss and remain disciplined. I can sit in cash without feeling powerless. I can allow my account to grow gradually. I do not need to prove my worth through today's profit. I came from scarcity, but scarcity does not get to operate my brokerage account. That is freedom. Not merely freedom from poverty, freedom from panic, freedom from urgency, freedom from believing that every opportunity is your last. Jessie Livermore taught us to sit tight. But for many of us, sitting tight requires more than market knowledge. It requires healing the belief that time is running out. It requires challenging the fear that opportunity will disappear. It requires refusing to make one trade responsible for repairing generations of financial exclusion. You are not weak because money carries emotional meaning for you. Your history makes that understandable. But what is understandable does not have to remain uncontrollable. You can learn to separate survival from speculation. You can learn to trade from preparation rather than panic. You can respect where you came from without allowing scarcity to determine where you are going. Your past may explain why you feel urgency, but it does not have to execute your next trade. So the next time you see SPY moving without you, remember this: you do not have to chase. The next time a position turns red, remember this: you do not have to prove anything. The next time you make a small profit, remember this is not the final profit available to you. And the next time the market gives you no setup, remember doing nothing may be the most disciplined thing you do all day. Livermore taught us that sitting could make the money. Scarcity theory teaches us that before we can sit, we may have to convince our nervous system that another opportunity will come. And it will. The market will open again. The chart will create another level. Another setup will form. Your job is not to catch everything. Your job is to remain disciplined enough to recognize what belongs to you. And you do not have to do that alone. Join the Trading Psychology for Reparations community, where I share the key SPY levels I am watching for free, along with practical trading psychology lessons designed to help you trade with greater clarity, patience, and emotional discipline. Do not let scarcity convince you that you must figure everything out by yourself. Join the free community. Get the SPY levels. Learn the psychology. Build the discipline. And become the trader who no longer trades as though every opportunity is the last one. Comment abundance below if you are ready to stop letting scarcity control your decisions. Like this episode, subscribe to the channel, and share it with a trader who needs to hear that their starting point does not have to become their ceiling. You may have come from less, but you are still capable of learning, of building, of growing, and trading from more than fear. You've got this. Peace and blessings, Dr. O.